You've seen it, of course, on Squawk Box. The stock is down sharply in the pre-market. This follows a spike in credit default swaps that occurred last night. Takes you back, of course, to the 07-08 period, and credit default swaps and how closely we watched them. This is a bank that's in actually a lot better shape than it was certainly coming out of the crisis, Jim. But it's not a name that's unfamiliar to many. I mentioned it earlier this week as sort of, well, will they try and come after it? When I say will they try to come after it, I'm referring to things like even that tweet yesterday from Boaz Weinstein at Saba, a guy who used to actually trade and really created the CDS market in some way when he was at Deutsche Bank years ago, getting people worried.
Okay. I think that's a great way to put it. Oh, by the way, I'm going long Yeti here.
Okay. Yep, that voice is still coming around.
But it's better than okay, you were there when it went. Okay, so David, first of all, the real problem with Credit Suisse, which is the analog, is they never made any money. Deutsche Bank is actually very profitable. So let's start there. Why bail out a bank that is just a chronic loser versus a bank that's doing well? Second, if you wanted to be aggressive on Deutsche Bank versus what you just apropos of what you said, you short the Deutsche Bank common and you buy these
buy the CDS,
and
which
blow
obviously
them out.
go up as the essentially as the credit risk is seen as increasing.
Right, and we saw that. But perhaps the most easily misinterpreted is what happened to the Credit Suisse fixed income when the government took it over. You had the country of Switzerland, of course, willing to bail out its finest name, merge with UBS. But what happened to fixed income was so devastating that I think people are saying, you know what, if Germany does that, God, I don't want to be in this.
Right. Well, it's the one class of bonds you're referring to at Credit Suisse. The Swiss regulators will come out and explain their reasoning. Of course, this was a very risky class. It was related in some way. There were provisions that said, hey, if you rescue them, these things get zeroed. But it did take as a surprise. It was taken as a surprise by a number of people in the market. It was $17 billion.
I know.
Multiples of the market value that was left at Credit Suisse, which they actually retained a bit of,
yes.
Surprisingly, perhaps.
Isn't it interesting if you buy the stock of Credit Suisse, and I'm by no means recommending it, there's earnings power. And you may have to deal with the fact that they actually have firepower buying back they're buying back some bonds. But right. I just think people say, wait a second, if Germany wants to seize it, Germany will seize it, and we're in trouble. But, David,
they're not going to, first of all, again, and they're not near this. Listen, I've taught any number of market participants I've spoken to this morning, and people that say we're not overly concerned about Deutsche Bank. They will admit to being concerned about the earnings power of banks across the board right now. Their cost of funds has increased. Their willingness to make loans has decreased. And so there is a question as to what earnings are going to look like for any number of banks, and you can see that reflected perhaps in the equity. But are there many who believe somehow that this large institution is in real dire straits? No.
But, David, a lot of things are coming from the governments themselves. So Christine Lagarde this morning reassures banks, okay? And I'm sure, by the way, Sarah will re-up that when she's on later today. But here's the issue. We're still going back to when the Fed raised rates, and we had that split decision between Yellen, who gave a populist Biden view on bailouts, and Powell, who acknowledged there are no bailouts. It's just credit. If all these regulators were to speak as one, saying, listen, good banks are going to be protected, which then might, good bank means positive equity.
Yep.
Then this goes away if they just use the term protected, because it'll be scary enough.
Yellen has come in for some criticism. I keep hearing it every time. Yellen, again, just this morning was a very senior member of the financial world, let's call it. Yellen, a little all over the place.
She is, because she's political. Just something I thought was
been a little all
her.
over the place, and that's not been helpful. That was a sort of a quote I wrote down. I can't tell you who said it, but
no, she played to the crowd. It was disappointing. She's usually above that. I think she should have been aware that her words were spoken.
Let's listen to the latest thing she had to say. This was, I believe, yesterday on Capitol Hill.
It's 3 o'clock.
Take a listen. A bit different than Wednesday.
We have used important tools to act quickly to prevent contagion, and they are tools we could use again. The strong actions we have taken ensure that Americans' deposits are safe. Certainly, we would be prepared to take additional actions if warranted.
I mean, she's been saying essentially the same thing, but obviously doesn't want to get into the territory. Says yes, all uninsured deposits are now insured.
But they do have a facility that they put in place, which basically says if you have bonds valued at 80, you can
put them to us at par.
And she seemed to not acknowledge that that is enough. If you have, all she had to do was say, listen, we have facilities in place. Of course, we'll do more.
Right.
It's her language. She needs to speak with the same language as another person who's in the government, which is Powell. But I thought she played on Wednesday and lost her credibility because Biden's against bailouts. So if you're going to give me a Democratic line as Treasury Secretary, then how about say we're fine? Because when you disagree with the Fed chair, you make a situation where people short everything.
And so much of this is just related to confidence, Jim. That's all we're really talking about.